Hey everyone, welcome to Sisters for Financial Independence. My name is Catherine Agupjan, and here at Sisters for Fi, we help you manage your money better so that you can live a life of impact today and tomorrow. In this video, I am going to show you the M1 Finance platform, and I am going to show you how to build the three-fund portfolio. The three-fund portfolio is a very popular strategy for those that want to invest for the long term. I will link up a card somewhere here so that you can learn more about the three-fund portfolio. There'll also be a link in the description so you can learn more about it. Quick disclaimer before we begin, this video is for educational purposes only, and that's because I don't know your personal finance situation, so you need to assess it for what your goals are, your risk tolerance, your need for liquidity. So please bear that in mind when you review this video. Again, this is for educational purposes only. I am specifically focusing on the M1 investment platform in this video because that platform is kind of hot, new, and trending. And after testing it for a few months, I have found that the UI and workflow is fairly easy and straightforward. And I believe that if one of your goals for the new year is to invest more, this platform makes it easy for you to do that. So in a few minutes, I will also go through the user interface of M1 platform so we can take a look at how you can create your investment strategy within the platform. M1 Finance, or what's commonly referred to as M1, was founded in 2015, and they've been around for a few years, and they're gaining a lot of traction as the investment of choice for many people. M1 is not a robo-advisor. They are what's called a self-directed investment platform, which means you do have to know a little bit about investing, portfolio allocation, and allocation to use M1 the way it was designed. Because they are not a robo-advisor, there is no human or digital financial advisor that can help you with your investments. And this is why I want to show you the popular three-fund portfolio and how we can build that in M1. Because they are not a robo-advisor, they don't ask you those questions about risk tolerance, your time horizon, and your investment goals. So you do have to know what those are for yourself so you can invest properly. Again, since M1 Finance is not a robo-advisor, it's good to understand some of the basics of what you're investing in, whether you're investing in stocks or ETFs, like expense ratios and how a portfolio is created and how allocations work. I will plug that we do have an Investing 101 course. It's self-paced, completely online if you are new to investing and want to learn more about it. We'll cover account types, some of the lingos and terms you'll encounter when you're investing for the first time, or if you want to dive a little bit deeper into investing. I will leave a link in the description box so you can learn more about it. A good thing to remember is that when you invest, you take advantage of compound growth, and sometimes it can be really scary if you're a beginner investor to jump into investing. But remember that you will invest your money, but you can also invest in your knowledge so that both money and your knowledge grow over time. M1 Finance does offer other products such as lines of credit and a checking account. I will not cover those in this video, but if you think they'd be helpful, let me know in the comments and subscribe to Sisters for Fi for updates and notifications on future videos. M1 offers this concept called expert pies, which are basically predetermined portfolios that you can invest in for free. These portfolios or expert pies are not tailored to a specific person, so you need to understand what those pies are made up of so you know what you're investing in and you can take your goals into account. For the basic M1 account, there are no fees to invest with M1. You do have to pay the expense ratios for the ETFs, which are present wherever you invest. So I am considered an elder millennial, and I grew up at a time when I had to look up stock prices in the newspaper. And I don't know if anybody remembers those, but they were kind of clunky. And so it's really exciting to see a lot of changes in the tech space, especially when it comes to investments. Right now, it is very, very easy to invest using your phone, using an app, and the internet. But what that also means is that there is a range of investment platforms out there, and it might be nerve wracking to figure out which one is the best option. Well, any of the platforms out there have got the basics covered, so you can't go wrong with any of them. They can allow you to buy and sell stocks and funds and trade. A big thing is that there is no such thing as a perfect investment platform. It really depends on your needs. And sometimes you don't know what your needs are until maybe you've been with an investment platform for a while or you've become a more sophisticated investor. When that day comes, then it might be necessary for you to switch to a different investment platform that has more account types or advanced trading capabilities for your new needs and goals. But I just want you to keep in mind that there are so many investment platforms out there. Don't be hung up on finding the perfect investment platform. Find the one that fits your needs today. And of course, if you need to, if you're growing out of it, you can always find one that has more features for your needs and goals. A big thing when it comes to finding your perfect investment platform is to find a platform that will allow you to consistently and automate your investment. And you need to find a platform that will not encourage you or put you at a place where you would complete some panic transactions. And this is basically panic selling or buying because you're hearing some news about certain things. So, what you want to do is make sure you review your internal goals and needs for your investments and find a platform that works for you. M1 offers a few account options, and these are the most common investment options out there: taxable brokerage, which I believe everyone should have; a traditional or Roth IRA, which is also, I believe, everyone should have. There are some income and contribution limits to the traditional and Roth IRA, but I believe that's a critical investment account to have, especially if you're saving for retirement or other goals. They also support rollover IRA as well as the SEP IRA, and they also provide the opportunity for a custodial account. They currently do not offer account types for simple IRA, solo 401k, 401k, HSA, or 529 plans. So you might have to go to a different investment platform to be able to invest in those types of accounts, and that's okay. M1 currently offers the ability to buy and sell stocks and exchange traded funds on the major exchanges. The big thing I currently like about M1 Finance is that it is a very sleek user interface. Its workflow is fairly easy to use. And for someone who doesn't need all of the advanced capabilities of a larger investment platform or day trading, I believe M1 can fit the needs of someone like that. I mentioned that I've been testing M1 Finance because most of my investment accounts have been with Fidelity and Vanguard. Those are the two companies that I started with for my investing journey. Fidelity housed my first 401k with the first company I ever worked for. And there is a little bit lag in the way that they design their user interface. And certainly they have more research tools, more capabilities, but a new investor or someone who is not looking to do a lot of trading might not need all the bells and whistles. Understandably, Fidelity and Vanguard don't have a lot of the new updates for their interface, although I do see them updating constantly. So in due time, I think you'll see them kind of be on par with all of these newer investment platforms. But I think you have to understand that Fidelity and Vanguard, their bread and butter is actually making those funds that you will be investing in. So right now they're slowly transitioning to a better workflow for their interface, and I think you'll see that in the next few years. I just want to share a quick screenshot of all of the other investment platforms out there, and I want to share that with you because I want you to know that there are options should this platform not be one of them. I also want you to really consider what you want out of your investment goals and needs. And I want you to know that if this investment platform doesn't work, you can always transfer your money to another platform. You're not stuck using the same platform for a while. So just keep that in mind. Before we dive into the M1 platform, I want to review the three fund portfolio. And this will be a brief overview, so I'll still link the card to a more in-depth review of what a three fund portfolio entails. And it's basically just how the name sounds. It is a three fund portfolio. It's simple and it's a cost-effective way for you to invest in the market. And the portfolio takes advantage of low cost index funds and ETFs to create an instant diversified portfolio across the world's stock and bond markets. And it guarantees yourself your fair share of the full world's market growth. Now, the three fund portfolio is made up of three funds. One is US stocks, second is international stocks, and last is total bonds. And stocks normally have higher risk, but they have higher potential for rewards, while bonds can provide a steady income growth, safer, and of course not as risky, so your money won't grow as quickly. And depending on your goals and risk tolerance, you will adjust the weights of each of these funds. So here's an example of what that might look like. So you will have one for international stocks, US stocks, and bonds. And if you are fairly young, you can and have the time to weather the ups and downs of the market. So it might be beneficial for you to invest majority in stocks or put more of those within the US stocks, international stocks. As you grow older or as you get closer to one of your goals, whether that's retirement, if you need the money for school, if you need the money for a house down payment, you can start changing the allocation so that you have more bonds and it's safer and you hold your money without risking of losing it to a down market. Now, when we dive into the M1 platform, I will show you how to create this kind of portfolio within M1. But I do want to also mention that you can basically build this three fund portfolio on any platform. And it really just depends on what kind of funds you have access to. So if you are going to directly build this fund on Vanguard, you might choose to use their mutual funds. And this is your three fund portfolio. The tickers for each specific fund is inside this little box here. And what you can do is just go into Vanguard and purchase these mutual funds. Now, when you do purchase the mutual funds, many of these have minimums, so you do need to have a good amount of money to be able to purchase the funds. But certainly, you can just go directly to that provider and create the three fund portfolio there. But if you don't have money and you don't have the initial investment to be able to create this fund right away, you can choose to do the ETF route. And what you'll just want to do is look for the ETF version of the fund. So for the Vanguard Total Stock Market, you have the option for the Vanguard Total Market ETF. And ETFs can be purchased at the stock price, so you don't need a minimum amount to purchase it, and you can buy fractional shares of that. And this is where M1 Finance can give you that option and give you that flexibility to be able to invest in a three fund portfolio without needing a lot of initial investments upfront. So these are the Vanguard ETFs that correspond to the three fund portfolio. And I will also want to mention that when we're going to talk about M1 Finance, I covered a little bit earlier that M1 Finance doesn't have all of the account types, where this is a limitation on their part. And But I want you to understand that because there might be a case, and it might be now or it might be in the future, where you will have access to different account types. So what you need to do is look at, from a holistic point of view, all of your investments. And you might have a brokerage account, you might have a Roth, a traditional IRA, or you might have an employer sponsored. Now, you can have all of these accounts all at one time. And it's good for you to understand that as you move across each account, you might have more investment options and less investment options. You might have the ability to contribute as much as you like. You might have limited investment options. And then, of course, you might have no tax advantages, or you might have tax advantages depending on what you invest in. And within these, you can also invest in your own set of funds and stocks. So you just want to be aware of what you're investing in these other accounts so that you manage it well and you're not over allocated towards a certain fund or a certain investment. The last thing that I also just want you to think about is the target date fund portfolio. And if you are familiar, or if you're not familiar with the target date fund, it's basically an index fund. It's a single package, and most of them have a 3 fund portfolio already inside it. So it handles the asset allocation and rebalancing for you. You can't customize what's inside it, but if you invest in it and use like a target date that has your target date for your goal, which is whether it's retirement or college education, the balancing and reallocation in that fund will automatically transition to a safer investment the closer you are to your date goal. Again, something that you want to think about, because at some point you may come back to your employer sponsored account and you might only have the option to invest in a target date fund portfolio. So you want to be aware of what that target date fund portfolio is investing in, as well as what you're investing in your individual retirement account or taxable brokerage. It might be the case that you're pretty good with this investment. You have a 3 fund portfolio, it's doing well, and you're actively investing in it, and you might want to start maybe doing other investments within your individual retirement account, especially as you learn more about investing and want to get more hands-on into the M1 Finance platform. Now, I just logged in, and what you will see is you will come across your portfolio dashboard. And I don't have a lot of money in here. It's just a test account. It has $24.96. And what I just want to do is focus on a few things, right? So if you use M1, you don't have to pay to use M1 Finance, the platform. But when you do invest in some of these funds, there will be some expense ratios that you will have to pay that keeps that helps them manage those funds. And I also just want to note that here is your upcoming trade. So this is your trading window. If you do want to do some more advanced trading, you can sign up for the M1 Plus subscription. And I currently have a free trial. If that's something that you're interested in, you'll see that underneath in your dashboard. But something to think about too is that, like, you probably don't need a lot of the advanced capabilities that a lot of these investment platforms have, especially if you are doing some very simple investments or doing this lazy type of portfolio. I hate the word lazy, but it's just a simple way for you to start investing, get your money in there, and take advantage of the stock market. Now, I mentioned earlier too that really the best platform for you to use is the one that allows you to consistently invest. So making sure you have an automated process that transfers money from your checking saving towards an investment account, and they invest it automatically. And 2, it's also a platform that doesn't make you panic buy or sell, or doesn't like promote the fact that, like, hey, the stock market's going down, you need to sell. So something to keep in mind too as you kind of look to see what type of platforms you want to use. Here is the area for auto investment. So you can set this up so that you can set up an automatic transfer from your checking account or savings account to M1. And then once you reach a minimum cash balance, you can set a number so that it automatically starts investing that money. Of course, you can turn it off should you choose to, but it's good to get used to that automated investing process. Okay, so let's now jump into the research portion. M1 provides you the ability to create your own pie, which is your own portfolio, or you can use their existing portfolio, which they call expert pies, for free. And you can invest in what their experts recommend. We are going to, let's dive into first into the expert pie so we can see what that looks like. So let's go into the plan for retirement one because it's probably the most popular, and you will see their varying retirement pies, and you'll probably start kind of thinking that these are very similar to your target date funds because there's a target date for them. So if you have if you're going to be retiring fairly soon, let's click on the aggressive, and you can withstand the ups and downs of the markets. You can head to the 2035 aggressive. So this is for investors with a high risk tolerance who expect to retire in 2035. And if you scroll down, you will see what it's made out of. And you will now see that it's made up of a good amount of other ETFs that provide you, again, diversification. This one has real estate, small cap, and a mix of bond investments as well. So now that you see what this portfolio looks like, you can now create your own depending on what you want to invest in. And so let's go to my pies, and I have some here, and I also have my 3-fund portfolio, which I have that $24 invested in, and I'm going to create a new pie so you can see what that looks like. So now I have the name for my pie portfolio. Let's add some slices. So we will add 3 funds to it. So if we don't know the ticker symbol, we can always just search by name. It's VTI. We'll add this to our basket. We'll also add the Vanguard International. To our basket. So this is the VX US and then the Vanguard World Bond. Now, if I just typed in Vanguard Bond, you'll see some options for the bonds. So, but I'm going to choose the Vanguard Total World Bond ETF to this. And let's add it to our basket. So now we have 3 funds in here, 3 ETF funds. We'll add that. And we have our 3-fund portfolio. Now, depending on your goals and what other investments you have, it's time for you to create the allocation that works best for you. So an example for an allocation might be 70% total stock market. International might be 20, and you might want to do 10% for your bonds. And basically, you've just created your own portfolio, your own pie that allows you to invest in a 3-fund portfolio. And the good thing about this too is that M1 can rebalance your portfolio in case at some point you end up growing, the total stock market is growing fast and you want to pull back a little bit, you can change a target to go back to your original allocation. So let's go ahead and save this. So what I want to do now is just jump into the fund section, and I just want to show you how you can further research some of these funds. Now, unfortunately, the M1 Finance platform does not have a lot of research tools that you can access, so you'll need to go back to whoever created that fund, which they do provide links for, so you can read more about what that fund includes. So if I were to do the World Bond, and I'm curious, like, what's the difference between this and another ETF? If you click on the fund name, you will see a quick profile of what it is and what its top holdings are. So this is an ETF that also holds other ETFs. So it holds both the Vanguard Total International Bond Fund and the Bond Market ETF. So what you can do is click on the website information. It'll take you to whoever's the provider of that fund, and you can search for the bond name, or you can do it by ticker symbol. So we'll go ahead and click on this, and provides you quick information on what this ETF is made out of. And if you scroll all the way to the bottom, you'll see that it's mainly made out of the total international bonds, so BNDX, and the total bond market index, BND. So you already get again another set of diversification within this this particular. It has around a 50-50 allocation across these other funds. Or 3-fund portfolio setup, you can add it to your larger portfolio so you can start investing in it. So here is what the 3-fund portfolio looks like when you have added it to your overall large portfolio, and you will see its actual and target allocation. And what you can do is click on the rebalance option, and it will automatically sell any overweight funds and buy underweight so that it goes back to your target allocation. I hope this video has been helpful. Don't forget to give it a like and subscribe to Sisters for Fi for more money lessons. The next video drops next week on Thursday. In the meantime, I will leave some links in the description for you to get started if you want to invest with M1, or learn more about the 3-fund portfolio, or investing in general. I will see you next time. Bye.